Hey, good morning. Whoops. I just said good morning with everything muted. Good morning, everybody. Welcome to the Monday edition. Here we are. Made it through the weekend, coming into the week. Paul, Rob, Andy, JW, nice to see you guys. Hope everybody's doing well. Um, let's do it again. What do you say? Hey, what's going on, Haji? Let's go through and let's talk about stuff and let's look at stuff and let's practice stuff. Good morning, Cav. And let's just really focus on having a good time, letting it be easy, not fighting anything. Um, Today is Monday, April 22nd, and there is no news at all. But every morning I go to forexfactory.com. Hey, Troy, good to see you. You need a lava lamp? Okay. I go to Forex Factory, hey Zorro, every morning, and I just check out what's going on in the news. And today it's a big bust. There's nothing going on. Nobody's saying anything important. Nobody's worried about anything or reacting to anything, and that's cool. That means just wait for the rules to met and trade away. But every morning I'm looking for high impact. I'm looking for medium impact. I'm looking to make sure that I'm not trading into emotional roller coasters. Everything that I talk about, guys, I mean everything. It's from the education page. We really do make a point to make sure that there's no secrets from you. And when I tell you that I'm going to give you everything that you need to be successful, everything that you need, I mean it. I'm not making that up to sound cool. I'm going to give you a very solid plan today. I'm going to give you a very easy to follow set of rules. I'm going to tell you which charts to do it on. We're going to talk about very, good morning, Muser. We're going to talk about very concrete, I guess, very black and white in the beginning for the brand new users, keeping you very focused on advantages. And we're going to do it. Let me click on the tutorial section here. Gonna do it with this trade, the high probability trade, guys. This is a trade that typically wins 70 to 80% of the time when you follow the rules. I'm gonna give you the rules. I'm gonna show you what the rules look like. We're gonna talk about the advantages. This is a trade where each indicator on every chart is gonna agree with the rules for the trade. So it's not like you're gonna be like, man, it kind of sucks, but I hope this works out. It's really gonna be this situation where you're like, hey, everything is freaking perfect. Let me pull the trigger. All your triggers are going to be the strongest, no termination conditions, no trouble spots between your entry and your target. And guys, I'm telling you right now that this is the trade that creates an enormous amount of confidence. And it does it through the memory of success. Most of us will fight this trade. Most of us will decide that we don't want to wait for this trade to set up. And there's an awful lot of us that are just going to try to be smarter than the indicators. I'm going to encourage you to not do that. And really, if you're brand new, if you're here with me, if you're just getting into your groove, focus on this trade, because this is the trade that turns you into a chart reader, guys. And being a chart reader is 90% of your day. It's really most of what you do throughout the day is reading your indicators, and convincing yourself that it's okay to wait for the rules to be met before you enter a trade, to convince yourself that it's all right to sit and do nothing. And it's your chart reading that's going to allow you to understand where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. Hey, what's up, Chef? Long time no see. Um, and it's this chart reading, these understandings of these concepts, where it's likely to continue, where it's likely to go, and where it's likely to stop. Guys, this is going to set you up for entries where the market is most likely to continue, the best of the best spot. It's going to give you a great idea of where the market is likely to go to help you create smart targets. And then you're also going to understand, hey, good morning, Abdulaziz. You're going to understand where the market is likely to stop. We call these termination conditions. And guys, these can put an end to a trend. These can reverse the market. These can create untradeable bounces. So we're going to focus on chart reading initially. Let me bring up the super cool slideshow here, get my laser pointer. Pew, pew. And your chart reading, is going to be why you enter a trade, if that makes sense. Your chart reading is going to be the reason that you're willing to pull the trigger, that you're willing to risk money, because your chart reading is going to tell you whether or not you have a statistical advantage. And I'm a big fan of that phrase, statistical advantage, meaning that you are trading a pattern that has been proven. Good morning, Jen. That has been proven through repetition, that has been proven through back study, that has been proven through simulation, that has been proven through time tested, going back and checking and double checking, and it wins more than it loses. So, hey, good morning, Erla. Man, I love it. I got everybody in here today. And that's what we're going to focus on, guys, that highest probability trend trade that provides a statistical advantage. Your chart reading is going to take you to trade entry precision. You probably will be floored at how great you become at pinpointing where the market is most likely to continue, how you're able to choose that spot to get in at that spot. Good morning, Bobby. And really commit to these trades where these advantages are present. And then once you figure out how to get into the market, once you're comfortable with your trade entries, man, that's where management comes in. And management's really, I like to think of day trading as eating an elephant. You've got to do it one bite at a time or it becomes overwhelming. So focus on your chart reads. Your chart reads will lead you to trade entry precision. Your trade entry precision will necessitate that you learn to manage, and you've got to kind of do them in that order. And it sounds like a lot in the beginning, and if you're new with me, it may even feel a little overwhelming, but I'm telling you, if you simplify and you focus on what's important, it's easier to catch these trades, to find these trades, to enter these trades, and to manage these trades. And your step-by-step path to becoming confident, ASAP. Post your trades in the room, guys. Everything that you do. Edwin just did it. He posted 3 in the room. Every time you read your charts and you're uncertain, post it in the room. Let's have a conversation. Every time you take a trade, win, lose, or draw, post it in the room. Let's talk about your chart read. Let's talk about what you saw and what you did and why you did it. And maybe there's a way to do it better. Hey, good morning, Miss Cindy. Happy Monday. Or maybe you did it so great that we just need to kind of virtually high five and say to ourselves, man, let's do that over and over. Like, that's the good one. Let's do it. And then the second thing is using your spreadsheet. Nexgen gives you a spreadsheet. I'm going to give you mine. I certainly don't mind sharing my spreadsheet. And your spreadsheet is really just, it's like a trade journal. It's a study book. Your first page is where you're going to take everything that you've done, post it in there. Every time you take a trade, you should be talking on your chart what your chart read was, because really that's the goal, to become chart readers. So you're talking about, what did I see? What kind of trade was it? Did I have momentum? Was it a clear path? Where did it come from? Where did I enter? Where did I exit? And you're doing this not because I want to keep you guys busy, that I feel like you need to work beyond the work, but this is the work that gets you results, guys, because every morning you're going to come back and you're going to study the previous day's trades. You're going to ask yourself what worked and what didn't work. And a few moments with well annotated charts every morning, guys, it's going to set you up for success on the day. It will accelerate your learning dramatically. And use the notes section to record the feedback that you get from class. Jen, you filled in half this weekend. It does help, doesn't it? Thank you for that. Nobody believes me until they do it, but once you go through it, guys, that's the other thing, is I'm going to teach you how to study. I'm going to encourage you to go through a couple simple drills that will increase your recognition, but ultimately it's up to you whether or not you decide to follow that. I can't force you, I can't twist your arms, but I will give you the tools and the know-how to be able to do it. So post your trades into your spreadsheet, guys, every time. Make sure that you include the feedback from class, because when you're pouring your morning coffee or your tea or whatever it is that you drink in the morning, your Diet Coke, I don't know, go back and look at your charts and say to yourself, man, I traded with every advantage and I won, and then where I broke my rules, I lost. Let me focus on advantages and let me focus on not breaking my rules. The third page is where you're going to create your trading plan. Every time your rules are met, Every time you see that high probability trend trade, take a picture of it, put it in there. If somebody else in the room posts a high probability trend trade and you hear the feedback, and the feedback is, man, what a great trade, what a great rules based, tons of advantages trade, steal their picture, put it in there, because what you're doing is you're creating recognition for what it is that you want to see when it's time for you to take a trade. I've put a little bit of work into it and created the client trade section, guys. And this has entries, both long and short, for the high probability trend trade. There's about 300 pictures of you guys being brilliant with the software, taking the advantages, turning them into trades. For you NASDAQ traders, there's something for you. As you grow with management, there's a section for you. Patterns that repeat themselves over and over in the market. And that's what we do, guys, is we trade patterns. So you're going to start to see the same thing over and over the more time you spend in the market. She is, isn't she? And then this is the termination condition. I jokingly called it the Novak loses trades. Because that was my challenge in the beginning, was trading in determination conditions. So I took probably 2,000 pictures of termination conditions to make sure that I could see them from a mile away. So really use the spreadsheet. And then what Jen and Paul are talking about right now is I've also given you guys a new tab, and this is only a couple weeks into it. In this new tab is where you can break down the individual rules of that excuse me, of that high probability trend trade. The green sections are rules being met. The red sections is what it looks like when your rules aren't met. And this yellow section is your pause section. That's where you have a 50-50 trade. And that, whoa, sorry. And that'll be the first trade outside of your highest probability trend trade that you take. So I gave you a section for that as well. But what Jen is mentioning and what Paul mentioned earlier in the room is that if you go through and you break it down into the individual parts, if you don't look for trades, but rather look for the advantages that your chart reads include or create, what you're going to do is you're going to be able to piece these single pieces together, and it really keeps it from being so overwhelming, and it keeps it from being just really too much for the new user. So you're going to keep it very, very simple. Post in the room a lot, guys. Ask a lot of questions. Use that spreadsheet. Fill it up. Commit to 15 pictures a day. You will be floored because at the end of a month, you're 300 pictures deep, guys. And by 90 days into it, you're sitting on like 1,000 pictures where you've had to annotate charts, where you've had to identify all these great things happening. We spend the first hour of every day learning the trigger line and the Fibonacci rules for when it's okay to trade. We're going to keep it simple and focused. You guys can simulate during the morning, simulate after class, do market replay, go through. But the key is keep posting those pictures in the room, guys. Keep posting until you're sure that you're following those rules, that you're sure that you're trading with those advantages. Because when you practice the wrong trades, especially if you get lucky, what happens is you create this short-term success and a long-term failure. And yeah, Paul, it never ends. And what happens, guys? Have you ever started doing something that you weren't happy about? And then once you got your groove going, you really got into it, right? Like practicing something, you're like, oh, this sucks. And then you kind of get a little bit into it and you're like, all right, cool, I got my groove, let's go. These pictures are like it. You're going to find yourself excited to take pictures of the rules being met. You're going to find yourself excited to look for these great trades because you're going to begin to recognize them easier, and your practice is going to produce those results. We will simplify heavily. I'm going to give you a rock solid plan designed to optimize your chances of success for only 2 trades, guys. And you have to understand what it is. What does it look like? What are you going to commit to? You've got to learn those looks so they become easy. Guys, this is where your spreadsheet comes in. If you really want it to be easy, take 1,500 pictures and you'll be like, oh my God, I'll never miss that. I know exactly what it looks like, right? And we're going to do this every day, guys. So annotate your charts. Be as thorough as you can be. Take the time to do it, and you'll definitely feel the results. Use that spreadsheet. Make sure you study it. And then let's go to the charts that we're going to use. And this kind of embraces simplicity. Only 2 charts. You're going to want to use more charts. You're going to see other people use more charts. You're going to hear stories from the elders of people using charts that aren't the charts that you have. Guys, you need 2 charts to be able to recognize the advantages for the high probability trend trade. You need a large chart and a small chart. Your large chart on the most current bar will define direction, momentum, and areas. Guys, your first 2 rules are met on the large chart. And when you walk away from that large chart to go look for an entry, you will already have the advantage of momentum and absolutely nothing in the way. And then when you come to your small chart, it's just going to refine. It's going to take that 1 bar and it's going to break it down into about 30, and you're going to pinpoint exactly where the market is likely to continue. It's going to reduce your risk. It's going to maximize your profit potential. And that's where rule number 3 comes in. So it's only 3 rules to catch the high probability trend trade. Each rule provides you an advantage. Your goal starting from this moment is to speak to yourself in terms of advantages. When you look at your chart, don't ask yourself if you have a long trade or a short trade. Ask yourself, do I have momentum? Is there a clear path? And if there is, do I have an area for entry? And if you do this, you're going to find it easier to adhere to the rules. You're going to find it easier to stick to having that statistical advantage every time. So large chart leads the way, guys. It's a great phrase. Large chart leads the way. Large chart has to have strong triggers, and strong triggers are about the easiest lesson you're ever going to get, guys. Strong triggers means that when the background is green and the market's moving up, the small triggers are above the large triggers. The solid lines are above the dash lines. There's space in between the 2, and everything is wide and angled in the direction of the trend. When you see this look, the odds are favorable for the market to continue up. When the background is red and the market's going down, small's below the large, larger wide, smaller wide, space between the 2. That gap between the small and large triggers means that the odds are favorable for the market to continue down. Strong triggers provides odds favorable momentum. Odds favorable momentum is the best of the best time to use that smaller chart to buy Fibonacci support to continue with the trend, to continue with the momentum, or to sell Fibonacci resistance to continue down with all that momentum. It looks like a tail on this large chart. On your small chart, that's going to be 15 to 30 bars. You're going to be able to actually pinpoint where that tail is most likely to form. So strong triggers, guys. Strong triggers should lead the way. Strong triggers should set you up. Strong triggers is really pretty easy. The gap between the small and the large lets me know that this is a market that's likely to continue in the direction of the trend. The small below the large lets me know that this is a market likely to continue in the direction of the trend. Smalls above the large, once again, likely to continue in the direction of the trend. And guys, I can really just circle tails. This is going to become a study tool. When I see odds favorable momentum, I'm going to circle a tail. And if that tail lines up with my rules for entry, well, guess what? We're going to put it into our trading plan for rules met. But let's scroll back. Is everybody okay? Separation between the small and large, guys. The look never really changes. It's a big honking gap between your triggers that lets you know that the odds are favorable for the market to continue up. Let's buy Fibonacci support. Continue up. Let's buy Fibonacci support. Potentially continue down. Maybe we can find an opportunity to sell Fibonacci resistance. So that's rule number 1, guys. And rule number 1 doesn't happen all day, every day. The best of the best is that big gap, that separation. For the new users, this should be your only option. Strong triggers pushes a market. Strong triggers can break key areas. Strong triggers can cover up mistakes that you make. I'm not going to lie. And strong triggers in the beginning, let's sell Fibonacci resistance. As the small triggers begin to return to the large triggers, one line may get inside, and this is really a big visual cue saying, hey, guess what? Your momentum is slowing. Everything is still down, but we're slowing down a little bit. We're pumping the brakes. We've pulled off the accelerator. And as you grow as a chart reader, you may still find opportunities to take short trades in there. And then when the smalls work their way inside of the large, guys, anything can happen. This is a visual cue. Hey, guess what? The trend is slowing. The momentum is gone. These are what we call weak triggers. And you don't know what's going to happen with these. It may be a deeper retracement. It may just fall out of bed, continue down. There may be a little sideways shuffle that you can't find any rules met in. Anything can happen is exactly that, guys. Anything can happen means that your advantage is gone. And there may be a point as you grow as a trader where you still find opportunities to capitalize. But for the brand new user, odds favorable is the best. As they begin to slow, it becomes more difficult. You've got to weigh in more factors. When it's anything to happen, you're kind of rolling the dice, guys. And if you hit a key area with these anything can happen triggers, that's when areas are most likely to hold or reverse the market or create bounces. And that's our segue to rule number 2. But first, I want to ask in the room, guys. You can see that the background is green. The direction is defined as up. The small triggers are above the large triggers. They're both wide, and there is, in fact, a gap between the two. The large chart has defined momentum on the most current bar. Now we're going to allow it to define areas, and we're going to do that by making sure that we're not trading into termination conditions. We're not bouncing into one of those areas likely to stop the market. When we have no termination conditions present, we're going to have room to our profit targets. And when we have room to our profit targets, we're going to call that advantage a clear path. And we're going to couple it with the momentum that's already provided. Termination conditions are nothing more than areas on your large chart that define the point where decisions are being made by the people that control the market, guys. These areas may stop the market. They may create a bounce. There may just be a huge fight there. But this is where the people in charge are taking profits, where they're entering positions, where they're trying to add on to positions. And we're gonna see that at red Fibonacci resistance and blue Fibonacci support. You'll see it at these yellow 1-to-1s. It's just a 100% Fibonacci alternate. Doesn't matter what that means. It just means that if you hit these yellow dots, watch out. Divergence high lines, where there was a loss of momentum. You see it visually. Divergence low lines, the same thing, guys. Cyan and magenta lines, they'll form off of a pivot, and it doesn't mean anything more than there was a loss of momentum at the pivot. I'm going to show you how to use those for termination conditions. And these lines can cause trouble, guys, but we're going to use the T3 trigger lines. We're going to make a very simple comparison, and you will know with a little bit of study whether these areas are likely to stop the market, whether they have the potential to break the market, or whether the areas have already broken and your path is clear. And we're going to do that with a very simple recipe, guys. We are going to allow price to reach an area, and that's the key. That's the beginning. Price has to reach the area. We have to set off that decision-making process. And when price reaches the area, in this example, it's support, all you have to do is ask yourself, where are the trigger lines? Well, if they remain above support, don't take any more short trades into the area. The area may stop the market, may create a bounce. Hey, good morning, Jose. Nice to see you. It may create a fight between buyers and sellers, the people in charge, and you don't want to be a part of that fight. You don't want to get caught in the middle of that because your advantage is gone. We like to wait for a clear path. And a clear path means that your small triggers and your large triggers have cleared the area in question. So if it's support, both small and large get below support. Good morning, PC. Support begins to behave as resistance. When I have all of that momentum, check it out. You guys just pinpointed the top of that tail on a smaller chart. This becomes your entry for the high probability trend trade that takes you down to the next decision-making process. And there's only 3 options for you guys, honestly. The first one is price reaches an area. If the triggers don't break, sit on your hands. Do nothing. Your rules aren't met. The advantage isn't there. Why throw away money, right? Or if the smalls and the large break above that resistance, it behaves as support. Let's look for momentum. Let's look for that clear path and maybe buy a little Fibonacci support on a smaller, faster chart. This is your high probability focus for 30 days, guys. It's either broken or it's not. You're going to work yourself into areas with the potential to break. You're going to see small triggers smash through areas, and then the large triggers may lag behind. 50% of your trigger lines are through, 50% are not. We actually call this a 50-50 look. And what it means is that with all that momentum, this is an area with the potential to break, but it's just potential. You took that area out to dinner. You guys saw a movie. You held hands all the way up to the door. And the thing is you had the potential for that goodnight kiss. But if that area walks in, locks the door, you're not getting it, right? So it is potential. It's not guaranteed. Man, Ed, I would be more inclined to say you hate rules. Everybody loves money. But when we hate rules, it sure is hard to collect. Guys, I'm going to give you a plan to take these trades, to take advantage of when these areas have the potential to break. But for the brand new user, keep it pretty focused. Keep it simple. Focus on the very basic rules. If price comes down and then it goes up, that's a pivot. If there's a loss of momentum at the pivot, guys, if the buyers steal momentum from the sellers, if momentum doesn't follow price, you're going to see this blue line form. You're not going to see this light blue line form until about the third bar up, which means that price didn't reach this area. Price creates it. Price creates that divergence low. So and it can't be a termination condition because the rules are very clear. Price must reach an area for us to go through the calculations, not create it. But the market pushes up and it pushes back down, and then price reaches the divergence low. When it does, you ask yourself, where are my triggers? The triggers remain above, and because they have, it is a termination condition. No more short trades. And if price trades below it and back above it, now it's what we call a pivot stop out. And one of the most common mistakes I see in the room when you guys annotate charts is people love to tell me, hey, Mark, this is a pivot stop out. And it's not. And I want you guys to really embrace this. This is just a pivot with a loss of momentum. That's it. Don't give it more than that. Don't make it this super powerful trend ender. Don't get scared of it. Don't do anything. It's just a pivot, guys. Over here, remember the recipe. Price reaches the area. And then when the triggers stay above, now it's a term. Now it's a pivot stop out. And you're going to see that labeled PSO. And a PSO is very powerful, guys, and this can reverse the market. And when it happens at Fibonacci resistance or support, it becomes even more powerful. But I want you guys to really get on board with the idea that divergence is just a loss of momentum. That's all it is. But because we have this awesome recipe to understand when it may stop the market, we'll be able to use that recipe at these divergence lows, at these divergence highs, and understand when they are potentially problematic. And then we're going to give you my favorite picture ever, guys. This is the one that I think everybody should pay attention to. This is the one that really reminds us that 90% of the day is spent reading indicators. 90% of it, guys, sitting on your hands doing nothing. Price is screaming down right into these one-to-ones, and when it reaches it, none of the triggers break. None of them get below. This is a termination condition. My rules say no more shorts. Hopefully your rules do as well. What happens is a lot of times people don't make money on the way down. And when you don't make the money, absolutely you can, Paul. There's one right there, right? There's your pivot, trades above it, back below it. There's no divergences involved. It's when those divergences come into play that they become a little more powerful. Very often I see people watch a move and they get a little despondent and a little dejected and they feel like, man, the market was going and it just kept going and I didn't get paid and I'm so upset. You know what? I'm going to hope that this area holds. I'm going to hope that this area of support with none of my triggers through it doesn't create an untradeable bounce. I'm going to hope that it just smashes through. And guys, I find people separated from their money quite often if you didn't make money in the move preceding that termination condition. From these one-to-ones, it goes right to resistance and all the triggers remain below. And then you get caught in this little sideways action. And that's about 45 minutes to an hour's worth, guys. And this is your 90%. And it's during this 90% where I see so many traders lose $500, right? Lose $750, lose $1,000 because they're creating this opinion about what they want the market to do rather than just accepting that there is no statistical advantage in that 45-minute window. Ultimately, you get momentum, off of that termination. Ultimately, everything gets above resistance, it behaves as support. Finally, you get that pullback to Fibonacci support on a smaller, faster chart. And guys, this is your high probability trend trade. This is the easiest one. This is that 10%. And here's going to be the biggest challenge each and every one of you are going to have as a brand new user, excited and adrenaline fueled to make that money. And what you're going to realize is that it isn't this 10%, right? This trade is probably worth, and we'll just create a number, let's call it a $400 trade. And what you'll find is that if you gave away 500 in the indecision, you're still down $100. And if you gave away 750, you're still down 350, or maybe you're down 600. And what I want you guys to get right now is that your patience in waiting for a statistical advantage is going to allow you to eliminate throwing away money. You will lose trades, but if you lose the correct trades, if you lose the trades with the most advantages, what you'll find is that the losses are smaller. You'll find that you'll take the exact same pattern and eventually it'll pay dividends. And 90% of your day, guys, is just waiting for this to happen. 90% of your day is saying, man, I need everything to be right so that I can get paid. And once again, I want to go to the large chart. And just for grins, let's take a look. There's one of those pivot stop outs that the triggers didn't get through, right? The large triggers didn't break. The large triggers didn't break these one-to-ones, so you're watching these areas. Weak triggers right at resistance. Look at the push down. The smalls broke through, but the large didn't. Not a clear path, and sure enough, the market goes up. And then as you come through, resistance to the tick and support to the tick, and that move started off of support and a pivot stop out right at the bottom. And you're going to begin to learn to recognize, to respect the idea that when price reaches an area and the triggers don't break, it's okay to sit on your hands. It's okay to do absolutely nothing. Is everybody cool with that? The recipe never changes. If you get there and the triggers don't break, do nothing. Otherwise, you're just embracing hope. I'm going to give one more termination condition, but I'm going to remind you guys first. The large chart determined my areas, guys. The large chart determined my direction, my momentum, my areas. Lines on the large chart can absolutely kill a trade. We're going to use lines on the smaller chart to pinpoint entries, but we will use one termination condition on the smaller chart, and it's going to help you identify when the large chart's making changes that you can't really see because it's such a slow-moving chart. And this final termination condition is the only one that I respect on a small chart, and it's 3 divergences in the same price range. We know that divergence is just a loss of momentum, right? And one loss of momentum, who cares? 3 losses of momentum in the same price range, well, now we've kind of changed the story. 3 losses of momentum may terminate the trend. It might terminate the trend. It could terminate the trend. It even has the potential to terminate the trend, but it's not guaranteed to terminate the trend. But because that statistical advantage is gone, 3 divergences in the same price range on the small chart is going to be an absolutely, positively, no rules met, don't have a clear path scenario. And guys, that's really rules 1 and 2 in a nutshell. Large chart is going to lead the way. Large chart's what the people in charge want to have happen. Let me show you my picture. Large chart, that's these guys. That is the guys creating momentum and establishing trends and reacting to areas, and there's this huge crowd. It's like Woodstock for you guys old enough to remember that, right? There's so many people that are moving this market. There's no reason to fight them. But there's always a group that will. There's always a group that has to be first. There's always a group that has to buck the system. And we love this group, guys, because this is the small crowd, and the small crowd forces a pullback. And the small crowd pushes us right to our perfect entry. And our perfect entry is going to happen on that smaller, faster chart. This is where rule number 3 is going to allow you to pinpoint the best of the best spot for entry where the market is most likely to continue. Doing so will allow you to reduce your risk. You're going to increase your profit potential. And rule number 3 for entry says that you're going to use a limit order to buy or sell a pullback at an area inside of triggers. It's the wordiest of the rules. And the advantage is that you have an entry area, the best of the best spot where the market is most likely to continue. And rule number 3 shouldn't ever come up in your life unless you have the advantage of momentum and you have the advantage of a clear path as a brand new user. And then as you grow, you may forfeit these a little bit, but in the beginning, guys, this is your best chance of success. So rule number 3 says that we're going to use a limit order. That means you're going to wait for the market to come to you. You're going to be so stinking good at this. You're going to know exactly where the market is most likely to continue, and you're just going to wait for it with an order, and you're going to say, come get me, market. You're going to have that order waiting at areas. Areas define problems on the large chart. Areas on the small chart will provide a bounce point to continue with the trend. Areas may be fibs, mid bands, or yellow 1-to-1s. And the key is that you want them to be at the triggers. I'm going to change that verbiage a little bit and call it favorable large triggers. Because triggers are cool, but triggers are nothing more than a moving average. They're where I expect price to go. Favorable large triggers, when your large triggers and your synthetic triggers are one on top of the other, when they're tight like snakes riding piggyback on that small chart, guys, this gives me the smallest possible correction point. Moving averages tend to suck price right back to them. And then when you give them an area inside of that correction point, fibs, mid-bands, yellow 1-to-1s, it gives the market something solid to bounce off of to continue with that direction, with that momentum, with that clear path. So favorable large triggers for the brand new user is your best chance of success. Favorable large triggers is going to reduce risk. It's going to create what we call the smallest window of opportunity, point where the market is most likely to continue. The further your large and your synthetics are splayed from one another, the bigger the correction points, the more risk on the trade, and it creates indecision. So when they're tight, life is easy, guys. And let's go through the process of finding an entry. This would be a long trade. And your long trade is 100% dependent on the large chart having strong triggers, giving me that odds favorable momentum, that OFM. And then the large chart having no termination conditions, giving me that clear path. Nothing in the way between me and my target. And when these are when these are true, only when these are true, I look for the small crowd to do their thing. Whew, my fingers are faster than my brain. All right, so the rules are met, and let's get that small crowd involved. Let's get back to the best of the best entry. It's going to start with a reversal bar. A reversal bar signals the beginning of the pullback. It lets me know that the small crowd is fighting. It lets me know that it's time to start looking for a couple different things. The first thing I have to look for are my trigger lines. Are they wide? Are they angled? Are they overlapping? Are they in the direction of the trend? My trigger lines are a correction point, not where I'm entering the market. My reversal bar sets off the pullback, not a signal to enter the market. Because trades will originate, high probability trend trades come from areas inside of favorable large triggers, which means that I'm looking for fibs, mid bands, and yellow 1-to-1s, and they need to be nestled inside of those trigger lines. So the wider the trigger lines are from one another, the more area there is where the market is likely to bounce. Guys, this shaded box, this is your first 30 days. I'm just going to cover up the old writing here. This is your first 30 days if you choose to accept it. Learn to pick out your entry point, because once you can find it, more importantly, once you trust it, life begins to get a little bit easier for you, because a couple things happen. The first thing is you don't get tempted to jump in on a reversal bar even before, because if you spend 30 days studying this pattern, you're going to realize that it repeats itself very often. If you spend 30 days, you're not going to let your small chart, small triggers rolling against you scare you out of trades, because what you're going to realize is that this loss of momentum almost has to happen to get you to the best spot. If you study this for 30 days, you're going to stop getting tricked by fluctuations on a smaller, faster, insignificant chart. And it's going to keep you from jumping into the market, right? Gino, if you're trading the NASDAQ in your first 30 days, you might as well go out front and put a bullet in the top of your foot. It'll be just as productive. If you don't know the patterns and you're trying to trade the NASDAQ, guys, then you're not in this to make money. Go swim with sharks. You're an adrenaline junkie. 30 days lets me pick the best spot. And what this does for me is if the market comes, I'm in at the top of that window. And if it goes a little deeper into the window, I don't exit. I don't panic. I don't worry, because I'm still where my advantage is. And even if it goes to the bottom of the window, guys, I've got absolutely no fear. I still have strong triggers. I still have a clear path, and I'm still right where the market is most likely to continue. This becomes difficult for new users, and a lot of times I see new users say, man, I hope the mid-band holds. I'm going to put my stop right here. Get stopped out, the market goes. Or, man, I hope that second fib holds, and I'm going to put my stop right here. And they get stopped out, and the market still goes. But once you go through and you learn to trust this, once you know where the market is likely to continue, you know exactly where the market shouldn't go. And it shouldn't go beyond that window of opportunity. And if it does, guess what? You're going to take a loss. And guys, this is acceptable losses. This is where you have to remind yourself that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30, and it's a cost of doing business. That's all it is, guys, is you're paying rent. I'll never tell you that you're going to win all your trades. You will lose trades. If you take this trade, you're going to lose probably 2 or 3 every 10 trades you take, every 20 to 30 of every 100. But when you have momentum, when you have a clear path, when you've entered where the market is most likely to continue, guys, more often than not, your result is profit target reached. More often than not, it's a win. More often than not, life is good. And that's your statistical advantage. And then once it begins to go in the direction of your trade, you can even reduce risk further. You can get below the reversal bar in the direction. And it's not uncommon to see Nexgen users take losers for maybe $20 or $30 instead of $200 to $300. So your losers become smaller losers. But you've got to study it. You've got to go back and take a look. And you've got to recognize on the large chart strong triggers. The easiest way to do it is to fill out strong triggers. Give me 25 pictures. It should be the exact same picture. And write on there, what does that mean? All red, smalls below the large, space between. This means odds favorable momentum. You know exactly what it is. Go through and do that little drill, and then make sure you understand a clear path. And guys, we don't trade these tails on the large chart. If you wait for the tails, the market is gone. But what you can trade is a pullback to support inside of favorable large triggers. And you'll see that the square on your window of opportunity lines up with the tail on your large chart with strong triggers and no terminations. And guys, this becomes your study process. You can literally go back 30 days if you want, with no pressure of wins or losses, with no pressure of anything. And just circle the tails. When the rules are met, circle the tails. And see if they line up with areas of support inside of favorable large triggers. And if they do, guys, take a picture and annotate it. Look, strong triggers. Hold on. Strong triggers, draw an arrow. No terminations, draw an arrow. Area inside of favorable large triggers, draw an arrow. Take this one, upload it to Screencast. Go to your spreadsheet, and under your favorite looks, man, drop it in there because you're committing this look to memory. And recognition comes through repetition. And call it. Never miss this look, ever. And come back and study it every morning so you know what you're looking for. And that's going to be the part that most of you omit, is doing the work. I'm going to teach you how to do the work. I'm going to show you what the work entails. I'm going to show you exactly where your entries come from, exactly what they look like for long trades. Reversal bar begins the pullback. Red box identifies my triggers, not where my trade happens. Little teal box here goes from the highest point of support to the lowest point of support inside of favorable large triggers. My limit order goes right at the top, and this fib hanging out outside of those triggers is not a part of my window of opportunity. By then, it's beyond the correction point. I don't want to be in a trade down there. You're going to be able to make money going up. You're going to be able to make money going down, guys. Reversal bar starts the pullback. The rules don't change. Identify my triggers. They should be tight, one on top of the other. The box, the shaded box, represents the areas inside of favorable large triggers, or even more importantly on this one, the area, one line where the market is most likely to continue. Guys, you're in this trade, and after the reversal bar, you're risking $50, maybe, because you waited. You knew exactly where to enter. You knew exactly where your stop goes. You knew exactly where to move it to. And because of the momentum and the clear path, dag nabbit, you knew where it was likely to go. This is what we do, guys, every day. And knowing where the market is likely to continue is the first step in management, putting your stop where it doesn't go. And then once it starts to go in the direction of the trade, you're going to reduce risk even further. And I'm going to say it one more time. It is not uncommon when you can identify the window of opportunity, when you accept the risk on the trade, and then when you manage it behind the reversal bars, not uncommon at all to see people only losing $30, $40, $50 because of their great entries. And I'm telling you, losses are going to happen, guys. 70% winners is an amazing living. 60% winners is an awesome living. 50% winners can still be a rock star lifestyle if you're managing your trades. So that's really my first hour, guys. Every hour. 2 charts lead the way. 3 rules. Whoops. 3 rules, each with an advantage to get you into the market. Make sure that you're tracking everything that you do. Make sure that you're posting in the room telling me everything that you see. And remember, you're not in charge. They are. We're just trading the patterns they create that give us a statistical advantage. Are there any questions about the high probability trend trade? Are there any questions about momentum? Are there any questions about being able to circle a tail and see if it comes back to support inside of favorable large triggers? And if we go back again and we see that tail, and look at that, dead to rights, right on the highest point of support inside of favorable large triggers. Guys, what I'd really like, especially if you're learning the software, is give me a why. If you see the correlation, between those strong triggers and the area inside of favorable, because guys, this is the money. This is where great stuff happens. And you know what's cool? Is if you recognize momentum, you may find other opportunities to trade momentum. And when you understand that trades work better when you trade from an area instead of into an area, well, now you're talking to yourself in terms of advantages. So I'm going to give you guys a plan. And this plan is going to be designed to give you an advantage, to optimize your chances of success every time you get into the market. And this is the KISS plan, guys. This is the Keep It Simple Sunshine plan. Bobby T's in here, so everybody thank Bobby T for the sunshine, because I used to call you stupid, but we had to change that. Keep it simple, sunshine. Give yourself the best chance of success, guys. This is the stepping stone in your learning journey. This is the beginning. This is the foundation that you're creating. This is designed to turn you into a chart reader. And this plan is designed to optimize your chances of success on the 50-50 trade, which is that one area not broken, but more importantly, on the high probability trend trade, the absolute best of the best. And then through your simulation, study, class feedback, and continuous practice, you will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. AI generated way to say is, guys, once you're a chart reader, you're going to see a bajillion things and you're going to find a way to take advantage of them. Once you're a chart reader, you're going to recognize so many patterns that you're going to try to take advantage of every one of them. And this is why it's important from day one to become accustomed to following rules, to become accustomed to saying to yourself, man, either my rules are met or they're not. Either I have my advantages or I don't. And there's only one way I'm getting in the market is when I have those advantages. So starts with your simple plan, guys. Don't fight the large chart. Don't fight the momentum created on the large chart. Don't feel like you're going to be able to beat these termination conditions as a brand new user. John Novak's best-selling book, How to Commit Financial Suicide, One Easy Step, got a nickel coming in. Trading against strong triggers, trading against the momentum created by the people in charge, trading into the areas that haven't broken, that the people in charge may be exiting as well. Guys, this was created tongue-in-cheek initially, but those are the two most common mistakes that new users make. Those are the two most common mistakes that people that don't follow their rules make. And I want you to pay close attention today. When we look at losers today, I want you to see if those losers fought strong triggers or traded into termination conditions and start to build a little trust in it. You're going to define your entry. Notice that your is all caps. This has got to be your entry, guys. You have to own this. This is your business. My entries can't be Gino's entries. They may look exactly the same, but my ownership keeps me committed to them. My entries can't be Troy's entries. They can't be Zorro's or Erla's or even Paul's. Guys, my entries are my entries, and I hold myself accountable for following my rules, and I hold myself accountable for the results and my ability to do these trades based on my rules. So this checklist defines your entry for the highest probability trend trade. That's all it does. This checklist defines what it takes to get you into the market. And I'm going to give you a copy of this checklist. So I'm going to drop it in the room right now. And I've never had anybody follow this checklist and do worse than 70%, guys, in the history. If you really want to make money, doesn't it make sense to maybe do something that's been proven to win more than it loses? Got the same checklist. What is a good top or bottom? Well, it's when that termination creates a reversal, guys. That's your good top or bottom. Here's your momentum. There's your momentum. And then here's the best part. And I think one of the most important things new users should do is, what does it look like when my rules aren't met? What is it gonna, what's that big red flag that says, hey, Mark, this isn't this. This is not the advantage that this provides. It's okay to sit on your hands. This is my termination condition. I've got to understand when not to trade so that I know what it looks like when it's time to trade. And then defining that window of opportunity, guys. All of this is right there for you as well. The checklist with pictures. Study those pictures every morning. And then the KISS plan, guys. The KISS plan gets you into the market where the market is most likely to continue. Let me drop that in the room as well. So there's 3 in the room for you right there, guys. The KISS plan, the high probability trend trade checklist, print it out, put it on your desktop. The one with pictures, look at it every morning. I'm even giving you the PowerPoint that I use every morning to teach this class. And then finally, just one more. There's my spreadsheet a second time. So everything is in the same spot for you. Once you enter the market, that's your first bite of the elephant, guys. That's the first piece of the puzzle. You've got to do something with it. You've got to learn to manage it. Management is a result of your ability to read charts ultimately. But you're just learning to read charts. You're really just getting to that point where you're recognizing things, and nobody likes to admit it, but your palms are sweaty and your heart is racing and your mind is racing. And you can feel the cushion of your seat sucking up into you as you pucker getting into this trade. And it's hard to manage and it's scary to manage because you don't want to give it back. But I can tell you, if you allow your management to begin with the correct entry, if you allow your management to begin with the perfect entry at the area of resistance inside of favorable large triggers, you automatically know where the market shouldn't go. And all you're doing is you're building a commitment to the idea that this is where my stop goes. And there's nothing for you to do from this point on, guys. You're either going to get stopped out, it's normal, just get stopped out on the right trades, or you're going to get that reversal bar because of the momentum, because of the clear path. And this is going to be your first stop movement. You will move your stop 2 ticks above that reversal bar, or if it's a long, 2 ticks below the reversal bar. And this is it. Once again, you're powerless. Don't do anything. Let it play out because you're recognizing stuff. You're learning stuff. You're either going to get stopped out for a smaller loss, or it's going to go to your first target. And again, for brand new users, $100. Everybody feels like, well, if I can make $1 million day trading, well, then $100 is insignificant and not worth my time. Utter crap, guys. $100, if I walked up to you at the Quickie Mart and I said, hey, guess what, Tony the Tiger? Here's $100. I hope you have a great day. You'd be stoked. You would be excited. Don't lose that excitement. That $100 adds up. And that $100 is creating confidence. And that $100 is a result of your great entry. And it's reinforcing that the hard work you're putting into it is beginning to pay off. And then you're going to go to break even. And let me backtrack 1 second. You will craft a plan based on your experience reading the indicators. So in the beginning, guys, there's your base hit. Thank you, Ron. $100 in. Absolutely no risk. Maybe not the best stop always, but for the brand new user, it helps you hold for that second target. And that second target's only $200 off in the distance. And that second target means that you just had a $300 trade on a 2 lot. And that second target hit once a day, and that's the best you can pull off, is a $72,000 year on a 2 lot. And that's the goal, guys, is consistent. You don't have to win big to win. You have to get paid. And $100 5 times over is so much better than hoping and not realizing that $500 trade 5 or 6 times during the day. And Ron posted that. Ron makes a living off of base hits. And it's rare that you'll ever see him hold for more than $100 plus his commissions. And it's also rare that you won't see him hit his goals because he's hyper patient. Everything he does looks exactly the same because he follows rules. He has a plan. He knows exactly what he's looking for. As a brand new user, you don't know exactly what you're looking for. You don't know. And that's why I give you the KISS plan, so that you know exactly what it takes to have a statistical advantage. You've got a solid way to manage it. And guys, this should be your first 30 days because you're going to become a chart reader. You're going to have trade entry precision. It's going to be very mechanical across the board. Your chart reading will take you to those 50-50 trades, guys. That trade where one area isn't broken, where it has the potential to break because of momentum. And I'm going to show you, hopefully I have it. Let me just get rid of all of these. I take a lot of pictures. Makes me happy. Makes me smart. So check it out. I made a little slide rule thing here. This 50-50 trade in the KISS plan is void of a clear path because it's an area that only has the potential to break. So since it only has the potential and you're speaking to yourself in terms of advantages, well, you can come right out of the gates and say, I'm unwilling to forfeit momentum and I'm going to make sure that I have the best entry area, right? Because you have 33% of your advantages already in place. Ed, I'm still going to review your charts while you're on break. If you need the reviews, if you're not sure what went on, you can always check it on the YouTube video later. Or if there's something specific when you come back in 40, let me know. We'll review it a second time. I don't mind at all. So the clear path is gone. I'm not giving up momentum or the entry. And guys, I want you to see how speaking in terms of advantages works for you. If you didn't have momentum or a clear path, would you be willing to give up 66% of your advantages to enter the market? If all you had was momentum, but the path wasn't clear and there was nothing to trade from, would you still be willing to enter the market? And guys, these are, when you speak in terms of advantages, you're able to answer these questions. So this 50-50 trade is not a clear path. The best way to take it, the highest probability way to take it, not a high probability trade, but the highest probability way to take this medium probability trade is to insist that a termination reverse the market, and that's what sets you up with all that momentum. To insist that the large chart has strong triggers as well as the small chart has strong triggers. And to insist that there's no divergence. And guys, when I tell you divergence is a loss of momentum, and I say it over and over throughout the day, divergence is nothing more than a loss of momentum, well then that's given up the next 33%. So it says it in bright red, no divergence. And if that's all true, enter the area. You have a medium probability trade. It reminds you if divergence prints, exit the trade. It reminds you again, if divergence prints, get the hell out. Guess what the biggest killer on 50-50s is? Can anybody guess based on the bright red words? Anybody? It's divergence. Very good, ladies and gentlemen. So your KISS plan is designed to keep you safe. Your KISS plan is designed to really keep you focused on the best of the best. Your KISS plan is designed to get you to where you can identify advantages in the market, and then you have a solid set of rules to take them. Are there any questions about the high probability trend trade? Are there any questions about the KISS plan? Are there any questions about really anything that we've talked about in the last hour? Guys, I can never see your faces. Did anybody go long? Maybe, possibly. Ah, there's my untitled workspace. I usually close that. There we go. And then there's that crazy NASDAQ, right? Let's do this. Let's build believers out of everybody. There's the 50-50 look. And there's divergence, killing it. I don't remember, Andy. There's weak triggers with divergence, and the market goes down. Void of momentum. Let's see. There's a 50-50 look right there at 942. There's divergence killing it. There's a 50-50 look. Anybody want to bet? Oh, there wasn't divergence. But it didn't come from a... Oh, it did. There you go. That's NASDAQ, strong triggers. I think it was crude, Andy. 3 divergences in the same price range. I wonder if that could have any effect on the forward progress of the market. 3 divergences in the same price range again. But Andy, if you took the entry right there, you might have gotten up, made a couple bucks before those weaker triggers and 3 divergences pushed you lower. Guys, that's my first hour every day. Every day is that's my first hour. When I come back, we're going to look at your charts. We're going to talk about them, and we're going to relate them to the rules. I'm not going to say, oh, you're so stupid. And I'm not going to say, oh, you're the smartest trader ever. I'm going to celebrate your victories, absolutely. But instead of beating you up for the challenges that you may have had, we're going to talk about ways to fix them. So if you took a trade without momentum, we're going to talk about the potential repercussions of trading without momentum. And if you took a trade into a termination condition, I'm going to point it out, even if you won. And guys, you've got to be willing to put yourself out there. You've got to be willing to be vulnerable, and you've got to be willing to accept the feedback, because I'm going to tell you right now is that the way you feel when you trade is not at all the way I feel when I'm looking at your charts, because I don't have an emotional attachment to your trade. I don't have any adrenaline. All I'm doing is reading your charts. And if you tell me what your chart read was, if you tell me why you did what you did, if there's a little flaw in the slaw there, then we'll come back together and we'll say, well, Andy, I'm going to use you because you're the most recent. Well, notice that you didn't quite have a clear path. Notice that your smalls were through, but your large weren't. And it just lets you know, hey, this isn't the highest probability trade. Let's make sure that everything else is perfect. And you might say, oh, I didn't realize that. Or you may say, I recognize that. And that's why I wrote it on the chart, because my job is to tell you my read. So we'll use this a lot too. If maybe you say, oh, this was a termination, and I can say, no, it was a 50-50. Or you may say, man, I had the best momentum ever. And I say, well, notice that the smalls came back. Let's go back to that lesson, guys. And that's what the second hour is. The second hour is nothing more than you guys showing me what you're doing and me talking about what it is that you've done. So I'm going to go take 5 minutes and stretch my legs. I always encourage you guys to do the same. Um, Getting up and walking away from your computer every now and then is not a bad thing. It helps you calm down, and it helps you relax, and you'll find that you're less likely to force trades if you're not sitting there for 3 hours just wishing something would happen. So I'll be back in 5, guys. When I come back, we'll start looking at your charts. If you have questions, post them. If you have charts, post them. I'll see you in 5. All right, guys, here we go. Let's get into that second hour. I'm going to scroll up to the very top of the room and we're going to start looking at the pictures that you guys posted. Some of them are chart reads, some of them are trades, some of them are just pictures and pictures. So I'm going to take a picture and we're going to take a look and we're going to see what we have going on. Rob said he traded without rules, and this is from Friday, but I wanted to make sure that we come back to it because I want to show you guys something pretty amazing that he did on this one. And Rob, I wanted to make sure that we gave you accolades. Rob has the best momentum ever. I mean, the best momentum ever. And he's got it on both charts, and there's nothing in the way, and life is good. And this is basically the market saying you have got a freight train free fall to the downside. And he found an opportunity to hop in and get paid. And guys, I'm telling you, these are the things that you're going to find as you grow with the software. You're going to find these opportunities to find some stuff. Termination, full reversal, odds favorable, in at the area inside of favorable large triggers, and stopped out almost instantly right inside of the window of opportunity. And guys, you're going to have to take these trades. You're going to have to take these trades. You're going to have to lose these trades to understand, holy smokes, that was the worst stop ever. Let me get back in and get paid on the trade. And Paul, I really like that you got back in on this one because this was perfect. This was a termination and it reverses the market and it's the best momentum ever. And your smalls absolutely smash through the area and your large are coming down. And there is no divergence, and it's a tiny window of opportunity. And the only thing that you did wrong here, Paul, is you put your stop right in the correction point below resistance inside of favorable large triggers. And that little stop placement, that willingness to fall on the sword when it's this pretty, keeps you from giving that money away, and it just means that you make even more on the way down. Absolutely beautiful trade, perfect read. That one should go into your favorite look section. And that would be perfect. Gary dropped a question in the room. He says, hey, Mark, is this a pivot stop out? Is this one of those pivot stop outs that I hear the elders speaking of? There's your pivot. There's a loss of momentum. That's all it is. When price reaches it, the triggers remain below. It trades above and back out. It becomes a pivot stop out, and these become powerful. What a great look. And what a great reason not to take that long trade that failed miserably because it was directly into a termination condition. And then Paul asks, it is a termination. Price touches divergence, the fibs. The triggers break below but not above. It doesn't go anywhere. So it is a termination and it never becomes a strong bottom. Paul taking those chart reads and really just kind of giving yourself this awesome understanding of what your indicators are telling you. I love it. That's a weak top. It's not a termination that reverses the market. And when everything starts to come below, Paul begins to look for opportunities, I'm guessing. And then there's a 50-50 from a good bottom. And let's see where you are at on this one. Two divergences on a 50-50 is not the best look, right? That's not my favorite look. And look how far it pushes below everything. The area is not broken. And guys, I think this is a great lesson. And Paul, let's use this picture. It's not the taught rules, but Rob, remember when I said that eventually you're going to see the stuff that appeals to you. You're going to see the trades that get you giddy. And maybe that's your trade, brother. As I want you to see something. 50-50, that's an area that's not broken. With the losses of momentum, look at how it pushes beyond that area. There's a fight. There's sellers and buyers fighting right there at that key area. You can see it on the smaller, faster chart. You can see the losses of momentum right at the decision-making point. You can see that the large triggers aren't through. you can see that there's this struggle. And this is why those 50-50s with divergence become lower probability trades. Because you just don't know. And if you got in and you follow the reversal bar, you still got stopped out. And it's these two divergences that tell you, man, it's probably not just going to smash. So it's a great read. But there was no weak top. There was a termination that reversed the market, that hit a mid-band, and that termination went up, and it's still just a 50-50. These divergences, Paul, can be enough to ruin the party. And it would have. It would have ruined your party. You should have been stopped out of that trade if you took it. One divergence on a 50-50 is problematic. Two divergences, if you're still taking those trades, you're creating enormous challenges for yourself. Strong triggers, clear path, and it pulls back to support inside of favorable large triggers, and off it goes to the races. Only waking up when that showed up. But isn't that perfect? Isn't everything about it perfect? I love it. Nice trade. And then Miss Jen. Termination at the blue fib. Everything reverses. You take a momentum style trade. I like this one, and you got out at resistance. That's okay. That's what repetition is for, Paul. Not remembering divergence with the 50-50s, that's just where repetition comes in. That's where writing it on your chart, having that checklist in front of you, the more times you do it, the more second nature it becomes. So Jen, you're saying when a 50-50 fails, when your triggers roll and everything stay above support, you just let everything line up and take a little momentum giddy up to resistance. Guys, that's a beautiful trade. It's not a high probability trend trade. But it's an awesome chart read set up from the failed 50-50, all the triggers above support, and then the small triggers in this really strong phase. Jen looks for an opportunity on a smaller, faster chart so that she could try to take advantage without too much risk. I love it. And then these are high probability. That's a 21-3. 13-2 triggers were weak, 21-3 strong. I think you're making stuff up. Weak triggers, not a clear path, divergence. Could have entered here. Man, dangerous, dangerous language, Paul. And I want you to see why. And guys, let me know what you think about this. So, Paul, weak triggers, not a clear path. Is this your best look for a long trade, Paul? Is this the trade that gets you excited, maybe a little tingly? I can't wait to go long with this look, with these weak triggers. I'm so excited to go long with this termination condition in play that may reverse the market. Of course not. So when you have that look and you're going back historically, and then it's divergence and weak triggers and outside, and you write things like, man, I could have entered here and look what would have happened, right? All you're doing, Paul, is you're saying to yourself, this chart absolutely sucked and didn't follow my rules. This chart didn't support it, but because it went up, there's a good chance I'm going to try to break my rules tomorrow on the same look. And what you're going to find, and this is why repetition is key, is that you're going to find more often than not that weak triggers create deeper pushes, right? Weak triggers create deeper pushes. Weak triggers create deeper pushes. And just because that nonsense worked once, if you go back and look at 10 weak triggers at areas, more often than not, there's an untradeable bounce. There's a retracement that would normally stop you out of the trade. Okay. So that 21-3, I'm just making sure that I'm with you. A 21-3 with strong triggers from a bad bottom says that I can take weak triggers, no entries, and that's cool if that's your trade. And I see why you're doing it. But remember, this is a slow, slow, slow chart. This is a slow moving chart. Your 13.2 is a slow moving chart. And then when you go up a time frame, it's even slower. And you may get one move in here that stops you out on a 13.2, right? Because look where your 21.3 large triggers are at that one. Couldn't we say that's a mid-band with the large triggers a full bar away? Gap theory. So yeah, just be careful when you start throwing in as many possibilities as you can to justify breaking your rules. I see that a lot. And I'm not saying that's what you did there, and I know that you use a 21. So 50-50 on the S&P. Great top, strong triggers, potential to break, no divergence, perfect entry, absolutely ideal stop placement. Ed, I know you're not in here, but if you're watching the video, so far I'm with you 100%. And it doesn't work because it's still a 50-50. That's okay. But that's okay. Guys, that's acceptable losses. And then, what am I missing? Almost got run over again. Let me figure out which way you're going. You took a short. I don't know where you took the short. I think that was the 50-50. And when a 50-50 fails, a lot of times it goes up. The small triggers turned against you. I'm not even sure what charts I'm reading here. I don't see an entry, but I see a stop. And it looks like you're coming off of support, and your small triggers are up, and your small triggers are up, and you're just hoping that the fib holds. Your 50-50 already failed, and it looks like it may have given you higher divergences. So I'm not sure. You've got a lot of information covered up. You don't show me your entry. It's hard for me to tell you what you missed if I can't see it. And then what is this 13.2 with range bars? But that's the gap theory. Does everybody remember the gap theory? Oh, sorry, Paul. The 21.3 is just a higher time frame. It's next in the Fibonacci sequence. It's a higher time frame. It's an even slower moving chart. Yeah, thank you for answering that, Andy. So guys, let's look at this one. 50-50 trade, I'm guessing. I don't know. It's a weird chart. Large triggers are a full bar away. One divergence gives you an opportunity. Second higher divergence says get out and wait for a signal. I'm not sure what's happening. This chart's hard to read. And I apologize, Ed. I'd love to see some rules written on the chart. I think that would be helpful. And then directly into a termination condition, and you say, I'll take the trade anyway because of a pink line. And you do take the trade anyway on the 50-50. Man, your charts are hard to read. I'd love rules. Guys, one of the reasons I ask you every morning, do me a favor. Tell me what you see. Tell me what you're thinking. Tell me why you did what you did. Don't make me guess. Don't make me guess. And I don't do this because I can't read your charts. And granted, this is one of those times where I'm struggling a little bit to read the charts because I'm not sure why you have range bars on a 13.2, and I don't know what else you've adjusted. And I don't see any areas inside of favorable large triggers. And you're coming from support and an outer band, and you're on the wrong side of everything. And there's a million things that I could pick apart. But if I don't know what you saw, well, then I can't help you. I can't say, give me your reasoning so that we can see if there was something going on with it. And then Miss Cindy, termination, odds favorable, 50-50, no divergence. That was your high probability trade. One divergence takes you up higher, you're able to get in. When it hits that lower divergence on a 50-50, never broke, you're not willing to lose much. Cindy, I really like the management on this trade. I think you did a great job of taking a medium probability trade, and you let the market tell you that it probably wasn't working. And I think, guys, that's key. Not sitting and holding and hoping, but rather saying, I'm in this to get paid. And if it's not perfect anymore, there's no reason for me to sit in here forever. There's no reason to hope. And you took what wasn't an outstanding looking setup and you capitalized on it. And you did a great job with it, Cindy. Nice job. You took a medium probability scenario and worked it into money. And guys, you got to be able to manage your trades. Cav, are you with me? Guys, remember when I told you that the pivot stop out was going to be the most misunderstood? So just for grins, let's go through and let's not worry about anything other than the pivot stop out first. In order for you to have a pivot stop out, in order for it to be a termination, first thing is price has to reach it. If price never reaches this area, it's never a termination. And then to be a pivot stop out, it actually has to exceed it a little bit and go back up. And guys, now it's a termination that reverses the market. And it's just a little language thing. Thank you for that, Jen. But what happened is the market goes down and it's stopped, right? And then it turns and the momentum is great and everything's heading up. And Cav says, with this much momentum on these triggers, let me grab a quick little shot and get out of trouble. And it's beautiful. And him labeling that pivot stop out has nothing to do with the trade at all. That's just me giving you guys a little language. So you understand that it's not a termination condition that reversed the market. Still a beautiful trade, using momentum for the win. And that's my favorite. So, yeah, okay. And it said right below, he had to leave. He hit his goals early and called it a day. That's amazing. And then Don, 3 divergences up top is a termination condition. I love that. Odds favorable momentum, I'm a fan of that. And then these are a little wonky over here. You get in right around 24, which is the pullback on the 50-50. You did have 2 divergences, and you're not inside of areas, so I'm glad that mid-band held for you. Don, are you with me in here? I want to share a pattern with you guys. That Don, I don't know if you recognize this or not, but this is kind of cool. And large chart was screaming, right? And I like it. These 2 divergences right here can be problematic. But what you did, and I don't know if you did it intentionally, is when I get 2 divergences and everything's pointed the same direction, very often we'll get one of those pivot stop outs without divergence, like Paul asked earlier. And this is where we expect that second divergence to push to. And you nailed it. I mean, just absolutely nailed it. And guys, that's kind of creating expectations on a chart read. With these split triggers, as long as you understand that it could have gone all the way up here, that the only really safe spot or where the market shouldn't go spot is way up top. But because the large chart is screaming down, because there were 3 divergences, I don't, Abdul Aziz, I don't use it. Never used it. My brother has. That would be one of those questions that over in Traders Chat, you would probably get get better answers. So Don, 3 divergences in the same price range is awesome. Odds favorable minimum is insanely good. Potential to break makes us happy. Everything pointed down is great. And you use the area, just not the area inside of favorable, and it worked out beautifully for you. I like the trade, Don. You had so many advantages that not having an area inside probably wasn't that big of a deal. Then there's that 50-50. And you went short against everything and got stopped out almost instantly. You got short against momentum. You got short against direction. You got short against everything. And that's funny because I said don't fight large sharp momentum. We were talking about the KISS plan, and you did it perfect for us right there. And then you said, you know what? To hell with it. I'll go short anyway. Against momentum. And I can't figure out why. I really can't. And then Andy, odds favorable, smalls broke, half at large, favorable large triggers, no areas. You bought at the reversal bar marker, managed out some money. That's a tough one. So are you telling me that you took a momentum style trade, Andy? I just want to make sure that I'm reading this right. You took a momentum trade, right? Because it wasn't a trend trade. 50-50 what? You have a clear path, but your smalls are inside, which means that the momentum is slowing. You have divergence, which means the momentum is slowing. Your smalls are inside of the large, which means that momentum is slowing. You don't have any areas inside of favorable large triggers. What made you decide that with all of that momentum slowing at 950? No, they're above, man. They're way above. They've been above since 948-ish. You entered at 950. Probably about right there. You had a total clear path because you were in at 47, and 47 is all the way up here. Do you see it? Not at all a 50-50. You are almost 10 points above the area, the problem area. So again, I'm not going to tell you what to do, Andy, but you took a trade just hoping the market goes up. And I don't know. And I guess I'm glad that you were able to manage out and make a little money on it. But I wonder how often that's going to work out for you. Paul, there's a picture for you in the room. Hope that helps. And I have to point it out, Andy, it's my job. But when I see weak triggers and divergence and weak triggers and the areas are way past the correction, man, you're throwing a lot of faith and hope. So what are your rules? Right? And Andy, this is where I believe that going through and filling out this spreadsheet would pay dividends. So what's a clear path? When both small and large are below support, it's now broken. The path is clear until the next area. And if you go through and you start looking at these pictures over and over, then what your brain will do, and this is kind of cool the way it'll do it, is it'll start to push it, to get it. It's the moving market, exactly. But this is why you have to take the pictures over and over. So there's your fib, right? Doesn't matter what color it is, doesn't matter anything. If the triggers are above it, it's a clear path. If the triggers are directly into it, it's not. And you've got to be able to discern that in a matter of seconds, right? If the small's separated from the large, it's odds favorable if one of them are in. It's a loss of momentum. And the idea is, and you're absolutely right, it becomes difficult to do it in the live market until you go through that process a lot. So, do I have strong triggers? What do you guys think? Do I have odds favorable momentum? Do I have strong triggers? So guys, if you're pausing because you don't know, then that's something you have to study. Not in my class, you haven't. This is odds favorable momentum. That's the only strong trigger look on God's green earth in my class. This may be a strong trending market, but it's not strong triggers. Strong triggers has one look, ladies and gentlemen. Smalls outside of the large space between the two. Promise you, 100%. This is the only strong trigger look. Is it a clear path? And if you believe that strong triggers, you might ignore it. It's not a clear path, right? And then one more. Do I have an area inside of favorable large triggers? Not really. Not from a pullback, because I'd start looking at the reversal bar, right? So guys, if you can go through that and say, not strength, F it, I'm done. Or if you say, well, it's a strong trending market, so I'll still look, but I don't have a clear path. But I don't have areas inside of favorable large triggers. You know that from your pictures. So let's go through. Smalls above the large are wide, guys. There's a lot of momentum going on there, right? But it's still not a clear path. And there's 3 divergences, another divergence, another divergence. And man, it's just, and it takes it a second, and maybe things are going to line back up, but you still don't have a clear path, and you have multiple divergences, and you've got to be able to read that in a moment's notice. Weaker triggers at fibs. Guys, that's a termination. And look at the reaction right off of it. So in the moment, guys, it's difficult as a brand new user to piece all of this together into a trade. But I promise you, from the bottom of my heart, if you go take 50 pictures of strong triggers, if you fill up this section all the way to 50, there's no doubt in my mind that you won't have any problems understanding whether that is strong or weak. And I'm just using your picture for an example, Andy. And if you go take 50 pictures of what it looks like to have a high probability trend trade long, you will never, ever mistake that look for the entry for a high probability trend trade long. So it's really up to you, guys. Do you want to do the work? Do you want it to be easy? Do you want it to be instant? Do you want it to be just effortless? And if you do, here it is right there. There's your drill. Go get on it. 25 pictures of each condition. Guys, it's recognition through repetition. That's how we get to where we want to be. That's how we pick these trades apart. That's how we don't find ourselves trading without the advantage of momentum or into areas that have the potential to hold. And look, there's another short against everything that didn't work. Damn it. How many times will you take this trade before you believe that fighting triggers is killing you? Good top, 50-50, no divergence, perfect entry, money, money. Come on, Muser. Beautiful. Strong top because the triggers never broke. Triggers roll down, wide, odds favorable momentum. Not a clear path, not concerned with momentum, no divergence, enter at the fib. So Muser, not only did you take a beautiful trade, but you annotated it in such a way that there's no doubt in my mind you're one step closer to being able to take this trade every way. You've identified where it's coming from. You've identified the level of momentum. You have identified whether or not it's a clear path. And then you defined exactly where your entry is. The only thing you didn't say was inside of favorable large triggers. But that's perfect. Everything about it is perfect. And it looks like it was a pretty easy win for you. And then you were in this trade waiting for price to reach the mid-band until you realized it was a 50-50 with divergence, and you bailed. So Muser, let's go through it again. Was it a 50-50? And this goes back to, if I am so clear on the idea of what a 50-50 is, well, then I'm never going to have that challenge. So where's the area? In order for this to be a 50-50, my smalls have to be through an area and the large are not. No. Okay, so the midband. So let's, and this is cool because this is where we can back up a lesson. The only time, Muser, that a midband is considered a termination condition is if the large triggers are a full bar away. So if your large triggers are right up on that midband, this midband is never a termination condition. It's just a green squiggly line in the middle of nothing. Does that make sense? And that's a result of what we call the gap theory. And I'm going to show you why. And we're going to keep going with this because it's a great picture. When I hit a midband, let's see if we can find an example. There's a good one. I hit the midband fibs. If the large triggers are a full bar away, I expect it to close the gap, that moving average thing. And that's very much when the midband is labeled as a termination condition. If I hit the midband and they're a large bar, full bar away, even fibs, midbands, full bar away, it's likely to close that gap. So on yours, in Muser, what's cool is the midband's actually not behaving. It won't take you long to commit that one to memory. But you had your order at the midband, right? And this is just the trading gods keeping you safe. So these triggers, and I love this lesson, these triggers represent where I expect price to correct. I expect price to come back to those triggers. That's just, it's the law of averages. They're moving averages. It's likely to happen. And the challenge is that your midband is in trigger purgatory right between the two, which is okay. But you have to be prepared for the market to push all the way down here, which means that if you're going to have a logical stop, it has to go all the way down there. Because a lot of times those midbands get run over. They may create a little stutter, but a lot of times they get run over and it closes in to that spot. So this is a great example of it. This is the picture that I use for class every day, reminding you that the tighter they are, the better the advantage. And then once they begin to separate, I've got two correction points, and stuff sitting in the middle of them isn't really safe, right? It's the idea that there's an area at the correction point, someplace where we expect the market to go, providing a bounce. So on your trade, I love the look on the large chart. The large chart is perfect. The small chart has a pretty rough spot. And this is where I might just wait for a little confirmation or something, just to give me a little more of an advantage. And kind of here it is again, right? We're into the midband, we're into the one-to-ones, the triggers didn't really break. And look, there's that midband stuck in the middle. See the two correction points? And look where the market is racing off to. Well, let's do this to answer that question. Let me see if I can find an example for you. So you have a line inside of triggers here, but you also have a line inside of triggers here. Which one is it going to go to? You don't know, right? Is it going to bounce off the 1-to-1s? Is it going to go off the mid-band? Is it going to come off of the top of them? Is it going to come off of the bottom of them? And the whole idea with favorable large triggers is that what it does for you is because there was a line inside of the triggers here, and it still went to the next correction point. So what those favorable large triggers are going to do for you is they're just going to take a lot of the indecision out. And you can say to yourself with no uncertainty that, holy crap, it should bounce here because the triggers are tight. It should bounce here because my areas are inside of favorable large triggers. It should bounce here because I have odds favorable, because I do have a clear path, because I have a very well-defined, and because of that super concise area, I'm more than willing to put my stop right here, and this is an acceptable risk. Where the flip side is, when it looks like this, you have to say to yourself, well, that's an area inside, right? And it may bounce from here. There's always that possibility. At the time of the reversal bar, that was inside, and here's my second correction point, and the only safe stop is all the way down here beyond the correction point, and that might have worked out, but my hope is that eventually you guys say, if my decisions are difficult because conditions are not perfect, do I want to risk it? Right? Is it worth the money that going into the trade? And guys, there will be times, I promise you, there will be times eventually where you'll say, I'm going from this mid-band up top no matter what, right? Because I feel good about it, because I had a termination. I've got the best momentum, and the likelihood of it correcting all the way back is less likely than it bouncing off of this mid-band. And you'll get to a point to where you begin to recognize that, right? Where you say to yourself, let's go back to the market, where because of this termination condition, because of this level of momentum, because of these screaming up, no divergence, I'm willing to take a shot from this mid-band, but I'll manage it maybe right behind these 1-to-1s. I won't put my stop all the way down here. And I'm willing to take a calculated risk based on my chart read. Does that help anybody, Muser? Does that make sense? When those triggers are split, we begin to lose that advantage of a very concise entry area. And, you know, management's a big part of what we do. So I hope that was helpful. Termination, odds favorable. You bought in the middle of nowhere. No worries. So Jen, absolutely no areas inside of favorable large triggers. You just jumped in. Do you see it? You just hopped in. A second divergence pushed you back to where your entry maybe should have been. And then 3 divergences prints. And you sold before you got to the termination. Working hard. Working hard on that one, but you really kind of put it together the lesson, right? Is it going to be these or those, right? And when they're split like this, it can be either. And it dropped lower, and then it comes up, and then it finally corrects, and then you get multiple divergences and lower divergences. And there's a lot of wonky on a 50-50 there. 2 divergences, 3 divergences, 4 divergences, split triggers. That's a lot of work without a lot of advantages, and that's boredom. That is, these mother scratchers haven't given me anything for a while. Let me make something happen. Maybe, it might be. I can't put words in your mouth. That's not the right thing to do, but that's what it is when I take trades like that, where I have to work so hard. Ooh, my favorite. Instead of showing me your butt, Gino, you gave me a however. Whoops. I don't know what I'm doing here. Hold on, reset. Just going to close that out. All right, let's see what we have. Termination, odds favorable, 50-50. Whoops, did I miss one in there? Hold on. Man, I think it sent me to a different picture. Hold on one second, Gina. All right, here we go. User error. No odds favorable momentum, however, and strong, well-defined bottom. Got long on momentum, bouncing off the area. Got out on the waning strength, live to get back in at an optimal time. So let me see where you got in. Down here around 22, 10-10. I'm trying to figure out where you got in. You got in at 29. So you were in here. Gino, this is a hard one to read. I love the termination down here at 19. It looks like you got in somewhere right here on the 50-50 after a pivot stop out with everything down, and it pushes all the way down to 27 and the triggers don't blink. And then when it starts back up off termination conditions with everything still going up, you decide to capitalize, get in, and then get out of the problem. Right on. So I think that the first one, and we'd have to back it up a little bit. I'd have to back up and see it. So hold on one second. Fortunately, I have a live market. Right about 10:07. And you've got different fibs than me, but you took a 50-50 with 2 divergences and everything rolling, and it just leveled you. Or did you take it with 3 divergences? You took it with 3 divergences, and it got you. And then after 3 divergences on a 50-50 and everything saying down, our charts don't look the same. And I just killed mine looking at yours. I could get on board with the next entry and managing it tight. I think that first one would have been a good one to avoid. I think you had enough going against you on a 50-50 that it turned into a little bit of a hope trade. And then the second trade is area likely to hold because of the triggers. And if I'm wrong there, let me know. But that one, you'd already had 3 divergences, I think. 2 divergences against it. It's hard to read. I apologize. Guys, give me all the information. If the more you give me, the easier it is. Then Abdulaziz, 50-50 fails. Smalls down directly into the area. I'm not sure why you did what you did. 17,209, 17. Oh, 289, 289. So you've got the momentum. Everything is red, and you hope the midband goes, and it does. And you let this chart roll over and start to head down. No divergence helps. Right on, Gino. You know what? If you tell me the large chart lured you in, I love that. I really do. If the large chart lures you in, then it means that you're letting the right chart lead the way. Um, and then you just let the small chart give you a second. Yeah. It took me a second, Abdulaziz. One of the things that tends to make it a little easier, um, but you got in after this pullback, after they closed to the synthetic. So I'm trying to line you up here. And then it starts cranking back down through, and that's where you take the snapback. So you didn't go into it, you let it react. And then when the triggers didn't blink, you took that little mid band, and it looks like you lined it up with an HVA. So I see the reasoning. Trading into areas is always scary. But I think you had enough reasons. You had every indicator red, and if I'm going to take a shot, every indicator red at least says go down, not up. And then you've been doing this long enough, you probably had virtually no risk as you got back to that trouble spot, if I had to guess. Because if you're in up here, once it starts going down, I know you're tight, right? Large chart holds. Where did it hold? Up here? Well, it didn't quite get there. But yeah, I see what you're saying. That was your fight, right? And they tried twice from the fight and it just didn't work. And you said, man, it's still going from up there. Let's go. I love it. Just trading with everything. It's amazing how many problems that takes out of trading. Um, Trading with the direction, trading with the momentum, trading with the trigger lines, trading with everything. It really does, guys. It takes a lot of the stress out. Let me figure out where I am here. I lost my spot. There we go. And then Miss Cindy, not odds favorable, but definitely a clear path. You've got areas galore, and they're just beyond, so probably low risk. And you take it down to the fibs. Nice trade, Cindy. That's 2 for 2, trading with direction, momentum, all the good stuff. Sure does make a difference, doesn't it? Sure does make a difference. And then this was, hold on, Zorro. Ooh, I know what Zorro likes. Zorro says, with all this momentum and a clear path, you better believe I'm going to hop in on the other side of trouble. I'm going to get paid, and I'm going to hop in again. Oh, and it looks like they tricked you a little bit. Nope, you took it down. Beautiful, Zorro. And consistent. 100% consistent. Odds favorable, clear path. Let me jump in, jump out. These aren't home runs. But if it doesn't change, why not get paid twice? Zorro, really solid work. You have found your groove. And then, Rob, that's kind of like what you're looking for. And then, Paul, did you get your answer? I put the picture in there. Were you able to fix it? What do you do when this happens with stops and targets? How do you get rid of them? Guys, that's the easiest way. You've got to go through reset, repair. It'll typically fix it. Triggers roll, odds favorable, 50-50, smalls through, snap back, and you get down. Very nice. So, Miss Jen, one thing that I'm noticing is you're abandoning the idea of areas inside of favorable large triggers. You're playing just the pullback to the triggers game, which is cool. I don't mind at all. But this is a little bit of a change for you. 50-20. And you're on the wrong side of the small triggers here. Before you were taking snapbacks to these triggers and lining it up with the triggers here so it made sense. But here you're on a 50-50 with divergence from the wrong side of areas and not to the areas. And it's a subtle change in what you've been showing me over the last week. So I want to point it out. You're still trading with momentum, direction, everything rolled, things are going. I'm just noticing a little change in your entry, and I just want to make sure that's intentional. How did you know that it wasn't going to go up to 23 at the mid band? What made you get in at the triggers rather than the area inside of triggers, since you were already on the wrong side of trouble with divergence? Just a chart read, curious. And you may have had a million reasons for it, but it looks different. Only momentum? Okay. So if it's only momentum, how do you feel about divergence if you're taking a momentum trade? Just working on the plans, right? Working on consistency. For me, divergence is defined as a loss of momentum. So, and if this area didn't hold, then I'm struggling with calling it a momentum trade. And momentum trades that fail tend to turn into trend trades. So just things to think about. Make your notes. You're killing it. Not knocking, but I'm noticing a little bit of a change. And I wanted to mention it just to make sure that the change is on purpose. That's okay. Momentum on the large chart is great, but my brother told me once, and he's pretty smart some days, usually the ones that end in Y. If you can't show me momentum on 3 charts, you probably don't have a momentum trade. Plain and simple. If you can't show me momentum on 3 charts, it's probably not a momentum trade. It's you hoping for the momentum to carry. And I see more lost momentum trades without momentum, more lost momentum trades without the momentum that turn into trend trades. And I see people getting stopped out at the momentum trade only to miss the trend trade after it. Termination, odds favorable, hoping gap theory works. There is no like it should. Great bottom, gap theory. There is no like it should, Gino. There is no what it should or should not do. It's just a pattern. And when you barely peek through and there's no areas inside, by the time you get down here to your MIT, you are going to be fighting momentum. You're going to be fighting large triggers. You're going to be coming off of a mid-band and one-to-ones that had just held. And you're putting an awful lot of faith in that bottom to go against a lot of things over here. So I hope that one worked out for you. JW, weak triggers, divergence from supports. You take your entry and you get out as you get to the mid-band. Same pattern every day. That's okay. That is definitely not a high probability trend trade. This is you doing what you do, going to the mid-band, creating those expectations. Talk to me, Jen. Hold on. Bad top. Where are you talking at? Pink one-to-ones. Right here? You never got a pullback. So your pullback started at 18. Your pullback started right here. So at the time of the pullback, you have a divergence low. No, not up here, because This was in the rear view mirror. When it, like these are way up here. At the time of your reversal bar, you put your wording right over it. You had a mid-band right there where my stop thing is. You had a mid-band right there inside of those favorable large triggers. And that's it. Momentum trades typically break, and then this is your momentum trade right here with odds favorable, everything going. Selling, hold on. Selling that fib, selling this fib with the small triggers through and all the momentum, that's your momentum trade. Momentum trades don't happen from the wrong side of everything after divergence. That's where trend trades happen. Your momentum trade is break through the area, sell the area, and hope it goes down. Does that make sense? There's a big difference between a momentum trade and a trend trade, right? So here you're directly in, there's no momentum, you didn't get through the area, so your only option is waiting. Yeah. Your weekend homework, you didn't get to the charts where to enter. That's okay. But you'll get there. You will get there. So, and I'm looking to see if there's any other examples on this chart, and there's really not. So here's a good example. If you were going to take the short, this is Cindy's chart. And Cindy didn't take it probably because it wasn't the best momentum. But that's your look. Like that's what a momentum look looks like. It breaks through, snaps back to the area quick, and then continues. And then when your momentum trade fails, it becomes a trend trade. So if you think about it like that, you know, I have to have odds favorable momentum to take a momentum trade. If I don't have it, well, then your brain starts automatically waiting for the trend trade instead of hoping to take a momentum trade without momentum. No, this is what class is. Class is you guys posting, asking questions, and me trying to figure out some way to turn it into a lesson. So this is exactly what class is. All right, Gino just didn't make it, huh? Came back and gave the bounce. Just didn't make it. And it's already reacting off support and fighting, and man, we'll see. Oh, JW, we saw that one. And Abdul Aziz, we saw this one as well. Did I just completely? I think we've seen everything. Guys, if I missed your charts, let me know. But I think we hit everybody here. And then Ed, are you back? You're back. Ed, I gotta tell you, eliminating this one is huge. Stop creating opinions on what the market's going to do. Just let it tell you what it's doing. Fighting odds favorable. That's why you get a nickel, right? That's your book. And then why do you have range bars on your 13.2? Just curious. But I wanted to talk about this one. Your entry right in between, right? It comes all the way down. The large triggers are pretty much a full bar away. That little patience piece gets you in at the top. Well, it's in the templates, but it doesn't mean that you need to use them. Just because it's in the templates. So let me go to my NinjaTrader 8 real quick. So when I look at my templates, I've got all of these templates. I got tons of them. You like them? What do they do for you? Did they talk you into fighting strong triggers? Did they talk you into entering early? Did they provide an advantage, or are they just pretty? And man, I'm a sucker for pretty. Ask my wife. All right. They're not talking you into anything you shouldn't be doing? That's the biggest question I ask myself. If I add something and it doesn't give me any value, but if that pink line talked you into a short, it's not serving you well because it made you ignore the triggers, right? And if something on this chart talked you into that short, if this pink line talked you into that short, then man, maybe you don't need to be looking at a range chart. I mean, you can. You certainly can. But I don't think it's serving you well. If you're looking at charts and they're forcing you to make decisions outside of your rules, then it may not be your best bet, right? Odds favorable up, everything says up. And this is just pardon my French, screw these guys. If the first short didn't work, I'm going to go short against all of it anyway because I'll show them who's boss. I know, I'm the king of that trade. I formed my opinion, damn it. I might have liked to rather seen, call me crazy, Ed. Your thought was extended triggers right at fib. So you have rules that say extended triggers right at fib. Could you show me 3 or 4 pictures of just that look that got you in? Because I want you to see something, and man, this is just me. I'm going to take a picture of your picture real quick. So here, I have strong triggers and a clear path. And I also had a pullback to mid-band inside of favorable large triggers. And I want you to notice that you got stopped out of a short that fought every high probability trend trade rule when you could have just been at 28.57 and maybe been in the market at 28.57 with a high probability trend trade. And it looks like that one may have gone all the way up to 35.36. What do you think about that? This was your short. That was your exit for the short. And this is why I encourage you guys to really stay focused on the rules. Stay focused on the best of the best. Give yourself those advantages. And the better chart reader you are, the more likely you are to deviate from your rules. And this is something that I see a lot, and myself as well, is I'll form an opinion. I recognize that the gap theory is in play, so maybe I'll just go short against momentum, and I typically lose. Or I recognize that the gap theory closed the gap to the large triggers, so maybe I'll just go long, even though by that point everything is pretty wrong on the charts. And the human brain has this inability to switch gears too much because our egos tell us that we're right. Our egos tell us, well, if I decided that this short should work, then it should work the next time for sure because maybe the market didn't get the memo and this odds favorable no longer becomes an issue. But that was it. That 28 went all the way up to 35-ish. You got run over earlier trying to go long from a 5-2 mid-band? Okay, but what did the large chart look like? Let's find your picture. Was this your first one? Because if it was your first one, I loved it. I don't think you were here, but I threw you all sorts of props on that entry. Let me get up to it. Hold on. Hold on. Ed, 50-50 no divergence, perfect entry, right? Is that the one you're talking about? That's beautiful. That's a good top. That's a 50-50. That is the best entry ever. That is low risk because of the reversal bars. Man, Ed, that's freaking everything that I could ever hope for. True story. And then it comes right back to this HVA line, and I know that this is my trouble spot on a 50-50. You took the perfect entry on a 50-50 trade. 100% textbook, rules met. I would have been in that trade with you because everything about it was chock full of advantages. And then one divergence prints on a 50-50, and that creates some challenges. And it dances. It really does. It dances. But see how the midband hold, or the HVA holds on the 50-50? But it's that divergence, Ed. It's that divergence on the 50-50 that says the chances of that working are going down. And that's where you just have to be okay. Your entry is beautiful. Your conditions were outstanding. Everything about that trade, Ed, was spot on to the letter. Everything that I look for in a trade like that. And honestly, when you're in at 25, you should have been in here on the first push without divergence. And then your risk is 1 point, maybe. And then when that divergence prints, you just get the hell out of the trade because it's not working anymore. And that's the biggest thing. Divergence already said it's over. If it were a high probability trend trade, absolutely. But it's not. And that's where you got to know what you're getting into. And thank you for coming back to have this talk. When this isn't broken, that's a deal breaker. Especially when your range chart is coming off the outer band, when those fast triggers have turned against you, when the HVA forms, there's a lot of information going on that says this trade's probably not going to work. But the only one, if you just committed to it, is this one right here. This one decreases the chance of success 1,000 times over. I love your entry. It just had to be managed. It just wasn't a home run, is all it was. Jen, I see you hiding charts. Does that make sense, Ed? Your read is perfect, man. I mean, perfect. Everything about it is beautiful. That one divergence. Just a good management opportunity. It sucks, though, especially when you get stopped out, you start looking for those things. There you go, Jen. That's how we're taking the momentum trades. If you're going to do it, right? There's your termination. There's your odds favorable. Breaks through, pulls back to the area. It happens to be inside of triggers. Easy peasy, mama. See, do you see the difference, though, between the two? And that's really the only thing that I want to hope. Cool. And this is going to be, since you see the difference, I'm just going to do this for the rest of the class. When that one doesn't break through, my brain automatically says trend trade or nothing. When this one breaks through, I'm selling the little snapback, looking for it to go. And it's subtle. It's so subtle between the two. But the cool thing is you're going to hear me ringing in your ear, and it's going to just annoy the hell out of you. And eventually it'll be perfect. So guys, what do we think here? Tail into momentum. My only area is beyond the correction point. Do you guys see that? And divergence from a 1-to-1. So the triggers are starting to weaken. The triggers have weakened. Divergence is printed, and my area is beyond. I'm no longer in the realm of high probability trend trade here. No longer a high probability trend trade. So I sit on my hands and I wait a minute. And I say to myself, it's not the best. Because I'm beyond the triggers, right? Because divergence from a one-to-one can be problematic. And even though the large chart leads the way, when the large chart has weakening of triggers, when the small chart confirms it a couple times over, and my areas are not inside the correction point, maybe confirmation becomes a great thing at that point, rather than just hoping that that mid-band holds. And I pulled away from it for a minute just because I think it's pretty cool that we don't have to be in it every second of every day. And you wait, and Ed, that's cool. Let me get this. This is the Monday blues. Will you take a picture of your ES for me? And I'm going to show you one of the patterns real quick. And let me go to JW's chart. Because JW has made a career on this pattern. And he does it so well. And I wish I just had 10 of his trades because they're all nearly identical. And Ed, I think that there's some good usage out of it for you as well, because it's a pattern that repeats itself a lot. And I'm scrolling through it. I'm trying to find it real quick. And that pattern is that weak triggers tend to make it back to the mid-band. And man, it's just, I can't find his picture. So let's go see what happened on, was that the ES? It was the ES. So let's talk about, you said you wait for it to go to the 13.2 and evaluate. So let's go through a chart read, Ed. If price reaches resistance and all the triggers are below, 13 is behaving as a termination. The same is true as 1391. And then the mid-band, by the time you get to the mid-band, everything's going to be pretty crazy against it, right? And you'll start fighting that immediate momentum and you'll start making those decisions. So what you can do is you can say to yourself, if I'm going to take this trade at the mid-band, well then my stop's already behind the reversal bar, but it's beyond the correction point. So I have to be willing to be a little bit humble and say to myself, where's my shapes? That I don't know if it's going to be the mid-band or this fib or that fib or this fib or that fib or the mid-band. So I've got a pretty big range of where that market may push up to. Does that make sense? And the only reason that I say this is I have to be constantly thinking, when I get here, if I get here, will it still be a good short? And I ask that because I don't want to get married to the trade. I don't want to get married to the idea that I'm definitively going short here. And this is one of those things where if you took the short with the reversal bar, I understand it with this look on the large chart. If you said, you know what, my rules really aren't met and it's divergence, I'm not willing to take it, I'll sit on my hands, I'm okay with that as well. But if you talk to yourself in terms of advantages, I don't really have the advantage of momentum anymore. It's been confirmed with the loss of momentum on the small chart. It's been confirmed with those one-to-ones. It's been confirmed with the smalls working in. So my next level is it going to be this fib, that fib, or the mid-band? And the reality is I have no freaking idea. So when I hit this fib at 1297, I might say to myself, maybe I'll take a shot with a reversal bar. Or I say, if they hit this one, they usually make the second one. Maybe I'll wait for that one, right? So as I get up to it, it's just a 5-1. But see how your smalls are starting to turn here? So, and now divergence prints. So maybe I'm not so adamant to get in here. Is it going to be this one? I don't know. It might. All my triggers are down. They're way below. I hit the second level of resistance. Maybe I wait for a reversal bar, right? And if I never get one, I never even think about it. But now I don't have odds favorable momentum. I only have a clear path. Now I don't have an area inside of favorable large triggers. I only have a hope that the area holds. So you've got to say to yourself, man, I'm void of 66 advantages right now, 66% of my advantages. Is it worth it for me to take a shot? And guys, only you can answer that question. But what sucks is when you were waiting for the pullback to the mid-band and you never got it, right? And then you start saying things like, well, I'll try it from outside of the triggers anyway. Well, I'll try it at the first area anyway. Maybe I'll take it from the second area. And if that one doesn't hold and I lose again, maybe I'll take it from the mid-band. And if the mid-band doesn't hold, well, then it'll probably go from 19. Let me keep taking shorts until my account's at zero. Not that I've ever done that. Or you can say, it can be any of these areas, and I like that you referenced the small triggers, Ed. If these are really going to hold, I bet you my small triggers will roll, right? If the large triggers still stay way down there, I'm sure my small triggers will roll. So why fight them? But it's no longer a high probability trend trade. Who's got a 21 chart? If you're trading a 21 chart too, like Paul, maybe Paul has odds favorable momentum to the downside to help support a potential short. And maybe you say, if I get a close on the correct side of those fast moving indicators, maybe I'll take a short and manage it appropriately, right? Manage it aggressively. My risk will be in place already. It puts me on the right side of the triggers. And if it never happens, I never have to worry about it. So there's all these different things that you can do. But it's okay to say, it's just not my trade anymore. So going short against triggers after a termination, you got lucky, right? Going short into the termination didn't work out. Going short against all the triggers didn't work out. And you missed the longs because of it. And that's getting married to a trade. And Ed, man, I've done it. I've done it. Notice how you never get a close off the area. There's no confirmation. And guys, all we're doing is just kind of watching the live market. I'm so far outside of my rules, there's nothing for me to do. But some of you want to take the trade anyway, so this is where you study patterns. What's it going to take? So let's go back and see what happened when that area held. When that area held, it gave me a divergence and everything rolled and it pulled right back to the large triggers. Maybe that's a pattern that would help. Hell, even when this area held, it pulled right back to the large triggers. So maybe I'm on to something. Maybe I should wait for a slowdown, wait for roll. Does that make sense, everybody? Great lessons here, I think. All right, so here's the mid-band. So how do you feel about it at the mid-band now? It's at the mid-band. My smalls are screaming up. My large have turned. I'm getting above the areas. Every chart says up, right? So I'm not just going to arbitrarily go short. Hell no. Let's let it slow and roll. I do have the gap theory in place, which means that it may close the gap, but that's a lot of strength to the upside. Can you guys give me a Y in the room if you recognize that you have odds favorable momentum up? Even if you don't have a clear path? And what is one of the quickest ways to blow out an account? To fight large chart momentum. Don't follow rules. That's a good one too. But do you see how rules are keeping us from making rash decisions just because it's a fib? Just because I thought it would go down? Just because I hoped it would go down? I know, Ed. Ed, it's your desire to be correct. Because if the mid-band holds and it drops all the way down here, you look like a badass. And even if we don't accept that in our heads and we don't say that, right? Man, it's true. Can you imagine how popular I would be If I called that short against everything and it worked, we're adrenaline junkies. Guys, there is zero reason to take a short. Now we have a 50-50 from a bad bottom. So there's two options, right? It's either going to keep going up or it's going to keep going down. Those are my only two options. Let me get a definitive answer. Hold on. Will it keep going up? Let's find out. I am, Ed. Signs point to yes. Indicators point to yes. Hold it. Let's make sure they're not messing with us. Will it go down now? Yes, definitely. Crap. Even the most trusted analysis, guys, can't make a decision here. Don't have rules met. Maybe I should sit on my hands. But that's really what it is sometimes, Ed, is man, and this faked you out. It made you think there was going to be a reversal bar, right? And it might still go down, but if it does, everything's going to go around. Jen, did they not have that toy when you were growing up? The Magic 8 Ball? You'd ask it questions. Hey, Magic 8 Ball, does Jen think I'm cute? You shake it up, all signs say yes, and everybody giggles. And you get mad because, and you got to punch me in the eye because I'm a stinky boy. Yeah, those were fun ones. All right, so let's think about it. You had kangaroos. Yeah, if you shake a kangaroo, they get mad. All right, so I have a bad bottom. I have odds favorable. I have areas inside of favorable large triggers. And I don't even have divergence potential. What do you guys think? Do we take the long and risk it, or do we say, wait a minute, that's a bad bottom, this is less likely to work? Order canceled. That doesn't fit the KISS plan. What are you just saying, Ed? What are you saying? 1850. Oh my gosh. Dude, I could build a yearly chart and probably say, I told you it was going down. That says down, right? That says down. That says up. That says up. That says up. So it's still 3-2. So you're short, Ed? Why not? I'm short 20. 30. Holy crap. 34. 38. 42. I'm going to fight everything because I built a chart that supports what I want to happen. Oh my gosh, and look, it's working. No, it's not working. Oh. Man. But guys, this is it. You can do it. And this is sim, right? And you can blow out on sim. Who cares? But you just showed me charts that supported your desire for a short. And it's not going short because everything says up. So why the hell are you building these charts? And let's do this even better. Check it out. That's a 50-50. That's weak triggers against it. That's strong triggers against it. That's crazy strong triggers against it. Right? So even if you do the trickle-down theory, one doesn't support the other. So wait for the best. Go with the direction. Oh man, it's still pushing up with momentum. So guys, 8 charts seems brilliant. Why? I can only see one. So let's see. Termination, everything rolls, momentum phase, clear path, odds favorable, jump in, get out. Right at trouble. Isn't that easier? Isn't that so much easier just trading with the direction? Trading with the momentum, trading with a clear path, getting above areas. And then Jen, there's your momentum trade, mama. Check it out. Strong triggers, snap back, giddy up. Boom. I keep picturing shaking kangaroos in my head too. That seems like such a bad idea. Nice. Yeah, wait till it's obvious. The problem is it never is, Ron. It never is obvious until you keep it simple, right? It's never going to be obvious if you're looking for everything. Man, I used to build so many charts and I used to use range charts and higher time frames and lower time frames. And all it did for me, and Ed, I'm only using yours because I can see all the charts at the same time. The only thing that it did for me is, and your mileage may vary, is I would look at this chart at support and no triggers through, and I would try to go long here. And then I'd go, no, wait, that's wrong. Everything is down, so I would try to go short right here. And then I'd get run over, and I was like, well, crap, maybe hold it, wait. And man, I would look at whichever chart got me into a trade. The more you look for, the less you see. Shark's teeth, huh? But what happens is, and maybe I'm the only person that this happens to, is I will convince myself to take a trade based on whichever chart suits my needs, whichever chart gives me an entry. And I will abandon my rules because if this chart says I should go long, even though there's a termination, maybe I can find a range chart that looks like a long trade, and maybe I can find a higher time frame that looks like a long, and maybe I could, oh my gosh, look, the short didn't work. Son of a bitch. Glad I didn't hold that 38 contracts because I was sure it was going down. And guys, this one had the potential to go down at 5 or 6 different spots, but the rules were never met. And I guess that's where I'm trying to go with this. If you just keep it rules met, rules not met, life is easy. And if you give yourself less to look at, life is easy. And if you make sure that the trades that you take, that your rules are without a doubt 100% proven to win more than they lose, well, then life is easy. And the further you deviate from simplicity, the further you tend to deviate from success. So it's up to you. You got to make decisions, guys. You got to make decisions. What's the easiest way to get there? I'm going to do it one more time because I'm a broken freaking record. Take 3 rules on 2 charts, and from those 3 rules, know exactly what it looks like to get in. And if you're not sure, well, then commit 2 hours of your afternoon to defining your rules and pictures so that when the market isn't moving, I know exactly what strong triggers looks like to the downside. And when the market isn't moving, I know exactly what strong triggers looks like to the downside on the most current bar. And when the market isn't looking, well, shoot, I know exactly what weak triggers looks like, what my loss of momentum looks like, where my advantage is gone. And guys, just spend a day on these 2 charts, strong and weak, 25, 50 pictures. You'll know the difference. What's a clear path? When both the small and the large are below support, the area is now broken, the path is clear until I reach the next price. That's it. That's what it looks like. And just to make sure that that wasn't a one-off, here, let me pull this off to the side. Let me click on like 6 clear paths. And let's see if we can find any common theme. Small and large triggers below. Small and large above. Small and large below. Small and large above. Small and large below. Small and large above. It's really that easy. On the ES, the last bottom we had, termination, divergence, did not hit a fib. Let me go to the ES and take a look real quick. Just a pivot from the middle of nowhere, Jen. That's all it is. Just a pivot from the middle of nowhere. It doesn't mean that the market can't go up forever. It just means that it's not a good top or bottom. That's all it is, yeah. Great read. So what does that mean? That means that a 50-50 here was less likely to work if it's set up. That's all it was. That's all that information gave us. This loss of momentum said that the market may try to continue down. So maybe I don't trade into these one-to-ones, right? I don't hope that the market goes up forever. And that pullback on the small in the middle, there was nothing to bounce off of, Jen. You didn't have any area to trade off of there. So if you jumped in hoping. And if you jumped in, you only had like 2 ticks to get to resistance with all the triggers below it. Yeah, for sure. Up, and you have a fib down here, Ron? Right on. And people will be different. I can try refreshing. I had some data issues this morning coming back in, so I'm loading in the tick replay. So I guess what I was getting at, guys, don't just take the pictures. Yeah, that changes everything, doesn't it, Ron? Take the pictures and talk about the whys. Why is it strong triggers? Why is it weak triggers? Why is it a clear path? Why is it a termination, right? What is the recipe for creating the termination condition? Price reaches the area, triggers don't break. And if you do this for each individual picture, guys, if you go through each one of these pictures and you talk about why it is what it is, right? Why is that a termination condition? Well, because price reaches support, triggers remain above, this is a term, the path is not clear, rule number 2 not met. How many times do you have to see that look with the market standing still to believe it?
Order submitted.
Whoops, I just submitted an order somewhere. To believe it when it happens up here, right? So that's a 50-50 with divergence, and there's one spot where the market may continue. Hardest things to wait.
Order filled.
Man, I didn't even see that in there. All right. I'm long on a 50-50 with divergence from a bad bottom. Odds favorable, weak triggers, divergence, market shouldn't go here. I didn't even know that I set up an order, but apparently I did. So let's see. Ed 50-50, one divergence right at the area inside of favorable large triggers, stops where the market shouldn't go. Why 2 different stops? That's weird. Is it high probability? No. Do I have a clear path? No. Is it coming from a good bottom? No. Where's my first trouble spot? Divergence high. This is it, guys. It's not a high probability trend trade. This is a bad bottom. This is a bad bottom with divergence on a 50-50, and now my charts are recalculating because I refreshed data. So I don't even know what's going to happen. You need to annotate butt on the, yeah, I've got to show my butt, huh? That's okay. I will. Once this comes up, I'll annotate it. I think the biggest thing is, should I expect to win 70 to 80% of these? Is it high probability? Are there problems that I can clearly see? So when I made the choice to take this trade, when I made the choice to take a trade, hold on, without a good bottom, against divergence, if this market rolls my ass right over, can I pretend to be surprised or feel like the market is against me? Should I feel, oh my gosh, this sucks and the software doesn't work? Or should I go back and annotate and say, man, I gave up that one and I gave up that one, and I think I gave up smalls outside of the large too. Oh, I did. All right, so let's do this real quick. This is my favorite thing to do. This is for you, Jen. Hold on. Is it from a good top or bottom? No. But it looks like a long. Do I have odds favorable in 13-2? I do, yeah. Do I have smalls outside of the large? No. But I think Ron's chart said no divergence on the 5-1. No. But I hope that it goes up, right? No divergence, no trade. Yeah, but... And guys, it's so easy if you just follow this. And this is where if you took the trade, you thought for about 2 seconds that shit got good, right? You thought for about 2 seconds that you breaking your rules was going to be the best thing ever. And then, Ed, you bailed. Because you know it's not the right trade, right? But Ed, you had a good bottom. You had a termination that reversed it. So let's go back to my annotations and let's do this. Hold on. Let me make a blue arrow right here because Ed, you had a fib. So is it from a good top or bottom? Well, yes. Do I have odds favorable? Yes. Smalls outside of the large, that's still a no. No divergence on the 5-1. Maybe I'm willing to forego that because of the good bottom. It looks a little better, right? And then, Ron, you clearly are in cahoots with my brother. It's just a matter of when you update, what you do, stuff like that. But guys, from a good top or bottom, it really changes the dynamic of this trade. From a good top or bottom, well, this 50-50 makes a lot more sense. From a good top or bottom, from a decision-making point that reversed the market, well, I may be more inclined to try this trade, but I still don't have an area. And if a second divergence prints, I'm going to get the hell out. And it's still not high probability, and it's still full of challenges. Oh, you got to catch them. They're like snipes. There's a way to get them. It involves a lot of clapping and screaming at your grandparents' farm. But you see the difference between a good bottom and a bad bottom? That may affect your decision-making process, so it's important to know where you're coming from. That divergence can affect your decision-making process. That where the triggers are can affect your decision-making process. But if you take a trade and you bail without your stop getting hit, it means that you didn't trust the trade. But this is a 50-50, right? One divergence, perfect entry, reversal bar printed. I'm at my trouble spot. This is where it's got to do something, right? Maybe I even say, you know what? I'll take 50 bucks right at the trouble spot. And I'll say it either breaks or it doesn't, right? Because I know this is low probability. But because I know what I'm getting into, I know how to manage it. And because I know how to manage it, I'm not arbitrarily jumping ship. I'm not arbitrarily entering the market. I'm not hoping or wishing. There's not this crazy desire to make something happen. I'm simply following a plan. And guys, you have to have a plan. Does that make sense? Ed, what changed? From the time you entered until the time you exited, what changed? Nothing?
Target filled.
There you go. All right. Guys, give me 1 second. I'll be right back. You need to go out. I'm coming, baby. All right, guys. So I'm back. But that's it. If you had a good bottom there, maybe one divergence isn't a killer, right? Maybe quick profits make sense. Maybe going through. But the challenge is, and Ed, I swear I'm not trying to beat you up today, is that you get into trades because you hope that they win, not because the rules are met, guys. And if that's your catalyst for pulling the trigger, if hoping to win is why you're getting into the market, it's going to create problems. And it really will. And it's okay to hope that a trade wins. I hope every one of my trades wins. I know they're not going to. But if you enter the market because you have advantages, because rules are met, because you can say, you know what, if I take a picture of this trade 100 times, I'm going to win more of them than I lose. Then you go into it and you almost don't even care what happens. You don't care if it wins or if it loses. But what you worry about more than anything is the execution of the method. And man, if I had a fib right here, you couldn't keep me out of this trade. And it went right to the divergence high. But shit, that was my $300, ladies and gentlemen. Pretty easy. But I could follow a plan to get into that trade, and my plan may be different than your plan. Your plan in the beginning is probably going to say that that's not your trade. But go back and take pictures, and maybe it will be one day. Who knows? Guys, that's about it for me today. I think we've exhausted it. I think if you get anything else out of this day, if there's anything else that you get from this day, let it be that following your rules is really, really the number one goal. And then lean on me hard by writing your rules on the chart. Lean on me hard by holding me accountable to hold you accountable to you following your rules. Absolutely, Ed. Ed, you're still one of the best chart readers in the room, and you have been for a long time. We just got to figure out how to get you committed to those rules, man. Because you know exactly where the trades come from. You show it to me every time you're in class. We just got to get you to eliminate the hope trades, the maybe trades. So